Good morning, you're watching World Business Report. I'm Karthik Malhotra. The next 20-25 minutes, stay tuned with us as we bring you up to speed with everything that's happening in the world when it comes to markets, business and the economy. Well, let's start with the financial markets in the US. Financial markets hit a muted tone today as Wall Street grapples with a significant slowdown. The market's lackluster movement is underscored by a notable underperformance of industry giants Cisco and Walmart, casting a shadow over trading floors as well as investor confidence. Take a look.
Wall Street's main indexes ended Thursday's session with mixed and muted moves as Cisco and Walmart weighed after disappointing forecasts. The Dow dropped 0.1%, while the S&P ticked up 0.1 and the Nasdaq gained fractionally. Shares of Cisco tumbled almost 10% as the technology company cut its full-year revenue and profit forecasts on slowing demand for its networking equipment. Shares of fellow tech company Palo Alto Networks also fell about 5.5% after it forecast quarterly billings that missed expectations. Turning to retail, Walmart shares sank 8% a day after touching a record high. The retail giant said U.S. consumers were spending cautiously because of inflation, even as it raised its annual forecast for sales and profit. Keith Buchanan is Senior Portfolio Manager at Globalt Investments.
The CFO mentioned one sentence that really scared the market, and he mentioned that in the last 2 weeks of October, they saw traffic and demand decline more rapidly. Of course, the last thing you want to do on an earnings call is lead into the last moments that we saw this quarter that we can speak to fluently, were some of the worst times from a demand standpoint. But Walmart it spoke about the e-commerce up 24% on a year-over-year basis, and that is in the tail end of 3 years of very substantial growth there in e-commerce. And it had an all-time high just the day before. So there were some positioning elements that led to the declines in Walmart today.
Walmart's outlook dragged on fellow retailers Dollar General and Dollar Tree, both down more than 4%. But Macy's shares rallied more than 5.5% after the department store operator's quarterly sales beat analysts' estimates. And after closing down nearly 3%, shares of Gap soared more than 14% in after-hours trading after posting better than expected third-quarter results thanks to easing supply expenses and cost control efforts.
All right, staying with the markets, Walmart's cautionary note sends ripples through the market, contrasting sharply with Macy's unexpected surge in Q3 profits. What does this illustrate? Well, a dynamic retail landscape and its unpredictable nature.
Walmart warned of a cautious holiday shopper on Thursday, sending its shares down more than 7% in early trading. The world's largest retailer, in its quarterly earnings report, said sales have been somewhat uneven over the past 2 months, as still sticky inflation and higher interest rates weigh on consumers whose household savings are dwindling. Still, Walmart raised its sales and profit forecasts for the year, its focus on groceries providing a bulwark against a slowdown in broader discretionary spending. More than half of Walmart's merchandise is food and other daily essentials. Walmart shares are up 20% this year and hit an all-time high Wednesday after strong earnings from rival Target. In other retail news, shares of Macy's were up roughly 7% on Thursday after surging as much as 14% after the department store operator crushed analysts' estimates for quarterly profit. The company is the latest U.S. retailer to signal that attempts to trim inventory from 2022 highs were finally beginning to take shape. Inventories at Macy's, which also owns Bloomingdale's, were down 6% year-over-year and down 17% compared to 2019. Gross margins improved, helped by lower markdowns within the Macy's brand and reduced freight costs.
Okay, staying with the retail landscape in the U.S., Target shares soar on the back of a robust holiday forecast, setting the stage for a potentially prosperous retail season. What is it doing? It's bolstering the confidence amidst the competitive market. Take a look at the story.
Shares of Target surged nearly 19% in Wednesday morning trading after the big box retailer forecast holiday quarter profit largely above Wall Street expectations. It continues to benefit from easing supply chain costs and efforts to control its inventory. Shares of Target were having their best day since 2019 on Wednesday, but the stock has lost about a quarter of its value in a turbulent year marked by elevated inflation. Shoppers have focused on food and essentials while showing reluctance to spend on electronics, apparel, and toys. Target CEO Brian Cornell said while shoppers are still spending, higher interest rates, the resumption of student loan payments, and other factors are keeping up pressure on them. The company is placing a big focus on value by offering most of its holiday toy collection below $25 and holiday decorations priced below $20. On Wednesday, Target forecast adjusted earnings to land between $1.90 and $2.60 per share in the fourth quarter. The midpoint of this range is higher than the consensus forecast of analysts. However, one analyst told Reuters the wide range showed that executives had no clue about what to expect this holiday season. Target has faced unique challenges this year, including backlash in May over its LGBTQ-themed merchandise and a spike in retail thefts that it said led it to shut 9 stores in large U.S. cities. Executives say inventory losses caused by issues including theft had decreased and would not be as bad in the fourth quarter compared to prior quarters, in part due to tighter control on inventories.
Well, Target there trying to stay on target this upcoming festive season, but I wonder what's happening to the toys on its shelves. The decline in toy spending is casting a shadow on festive time, signaling potential adjustments in Santa's sleigh load this holiday season and reflecting shifting consumer behaviors. Take a look at this story.
Santa might not have to work so hard this year. That's because parents around the world look set to spend less on toys over the holiday season. Big-name toy makers like Hasbro and Mattel have already warned of weaker industry sales this year. But now experts say the holiday season could prove even tougher than expected. The boss of Bratz dolls maker MGA Entertainment told Reuters he's expecting sales to be down as much as 12% compared with last year. Tamagotchi maker Bandai says it's expecting widespread discounting as retailers try to shift leftover stock. Industry experts at Euromonitor predict sales of action figures like Transformers will drop 2%. Anticipating the lower demand, retailers have ordered less stock for this year, meaning popular items could sell out. US imports of toys fell by almost a third over the 3 months to the end of August, usually a key period for ordering holiday stock. Inflation is the big problem, with consumers expected to focus on food and other staples as household budgets get squeezed. Now Black Friday will offer some early clues to the outlook. Barbie maker Mattel says it's already seeing discounting ahead of the annual sales event. Even so, some industry experts do expect a late surge in toy spending around year-end. If that means Santa doesn't turn up quite so empty-handed, kids worldwide may still have to give their Christmas wish lists some very careful thought.
Well, let's hope Santa doesn't indeed come empty-handed this Christmas. But staying to the corporate sector in the US, Siemens has defied expectations, surpassing predictions with a sales outlook after a record-breaking Q4 that demonstrated resilience and adaptability in the face of challenges. Take a look at the story.
Investors were drawn to Siemens on Thursday, with its stock price rising more than 6%. The German group posted strong results and an outlook that beat expectations. The company said it expected revenue growth of 4 to 8% over the next 12 months. The projection was less than the 11% rise recorded for this business year, but still much higher than recent estimates. But Siemens further said sales growth would slow next year. It expects sluggish demand, especially in China and Germany in the first half, but it believes improving trends will emerge later in the year. Siemens shares were also supported by record results for the July to September quarter. Sales rose by a tenth to $23.19 billion, beating analyst forecasts. Siemens has seen demand levels return to normal in recent months. That followed a post-health crisis jump when customers ramped up production and pre-ordered in bulk to avoid shortages of key components. The company has also been working through its massive order book, which stood at $120 billion at the end of September.
All right, well, let's move on now. Let's move on, but stay in the space of technology. Alibaba's strategic shift comes into focus as plans for a cloud business SpinOff get scrapped, altering the company's trajectory amidst evolving market dynamics. Take a look at this report.
Alibaba cancelled plans to spin off its cloud business on Thursday. The Chinese giant blamed uncertainty caused by US restrictions on the exports of chips used for artificial intelligence. It's a quick turnaround for the e-commerce group, which had only unveiled plans to carve out the cloud business in March. Analysts had estimated the cloud division could be worth up to $60 billion, but they had warned its listing could attract major scrutiny from both Chinese and overseas regulators due to the data it manages. In September, Alibaba's former group CEO Daniel Zhang quit just 2 months after putting his focus on cloud computing. The company then appointed Eddie Wu as both CEO of Alibaba and the cloud business. Alibaba also reported second quarter revenue of just over $31 billion on Thursday, in line with expectations. Investors weren't delighted to hear the surprise decision from Alibaba on its cloud segment. The company's US-listed shares were down over 8% in pre-market trading.
Well, the chips seriously do seem to be down in the case of Alibaba. But what about coffee and biscuits? Well, in a bold move, Starbucks employees stage walkouts across hundreds of US stores. Why? They're demanding change. They're demanding better workplace conditions. And this is not the end of it. Take a look.
Workers at this New York Starbucks store and hundreds of other locations walked off their jobs during a key promotional event on Thursday. They demanded improved staffing and schedules, the Workers United Union said on social media platform X. The walkout came on the coffee chain's Red Cup Day event, during which Starbucks hands out free red-colored reusable holiday-themed cups to customers on their coffee purchases. Edwin Palma Solis is a Starbucks barista trainer.
We want to make sure that we have a better pay, staffing, scheduling, and we have the right amount of hours to work because they've been improperly staffing us. And sometimes it just makes it harder for us to work. You know, sometimes we feel like we work for 2 people instead of 1, and we're just tired. We're just really tired of overworking ourselves.
Starbucks said on Thursday its stores in the United States were open, adding that a few dozen stores were on strike. Red Cup Day has typically been a major driver of store traffic, with data from analytics company Placer.ai showing that visits to U.S. Starbucks stores on the same day last year jumped 94% over the daily average for the full year. Workers United, which represents more than 9,000 Starbucks employees at about 360 U.S. stores, has said the event was one of the most infamously hard, understaffed days, as drink orders pile up and employees end up on the receiving end of abuse from frustrated customers over long wait times. Earlier this month, Starbucks said it would raise hourly pay for its U.S. retail workers by at least 3% starting in 2024, which employees criticize, calling it tone-deaf, given Starbucks' 11% increase in fourth quarter revenue and the recent wage hikes won by auto workers.
Well, strong disruptions coming there from Starbucks, even stronger than the espresso shot. But another story which is gaining attention in the US is on account of laptop sales. Lenovo faces another sales decline within a sluggish PC market, navigating turbulent industry waters and seeking strategies for sustained growth. Take a look at this report.
These are tough times for computer makers. The world's biggest, China's Lenovo, posted another drop in sales on Thursday. Revenue fell 16% to just over $14.4 billion for the 3 months through September. That was worse than expected, and the firm's fifth straight quarterly decline. Lenovo and rivals enjoyed a huge boom during lockdowns as people geared up for working at home. But the aftermath is proving painful, with PC supply now exceeding demand. In May, the company reported a 14% decline for the year through March, its first annual fall since 2019. The worldwide market for PCs remains very sluggish. Industry researcher Canalys says worldwide shipments were down 7% in the second quarter of this year. To improve profits, Lenovo is now focusing on non-PC products. That includes smartphones, servers, and IT services. The earnings numbers coincided with news that Lenovo is suing Taiwan-based rival Asus for patent infringement. It's seeking damages in a California court case. Asus didn't comment on the news. Lenovo shares sank around 3.5% on Thursday following the downbeat results.
Well, tepid sales numbers there from Lenovo, but that's not the only sector that is seeing a sales slowdown. Burberry, the luxury brand Burberry, grapples with the effects of a luxury spending slowdown as well, mirroring broader shifts in consumer preferences and their impact on renowned brands. Take a look at this report.
Investors weren't happy with what they heard from Burberry on Thursday. Shares fell by as much as 1/10 for the fashion brand. It followed an update where the British firm said it was hit by a global slowdown in luxury spending. Burberry also warned it would struggle to meet its annual revenue forecast of low double-digit growth if the slump continued. The firm reported a sharp slowdown in comparable store sales growth in its second quarter to 1%. That was down from 18% in the first quarter, as growth in China fell off sharply. The Americas also worsened in the quarter, with comparable store sales there down 1/10. Luxury has been out of fashion for shoppers hit by rising inflation and economic uncertainty. And it's not just Burberry finding the market tough. Rival LVMH, owner of brands like Louis Vuitton and Dior, reported a slowdown in quarterly sales in October, as did other major brands. But there were some positive noises coming from Burberry. It said early indicators of demand for its Winter 23 collection were encouraging.
All right, mixed signals there, sales down, but trends looking encouraging. But what's not looking encouraging is inflation in Russia. Escalating prices in wartime Russia loom large as elections approach, and it's impacting citizens' daily lives as well as economic stability. What is this doing? It's in fact adding complexity to the already fairly complex political landscape. Let's take a look at this report.
In grocery stores across Russia, prices have been soaring. Families are having to cut back as they grapple with high inflation caused by the war in Ukraine and a myriad of sanctions imposed by the West. Mother of two, Daria Stepanova, is among them.
One of my kids is 5, another one is a newborn, and I can see how much everything has become more expensive in the course of these 5 years. Pampers are 2 to 3 times more expensive now. Baby food is now 4 times more expensive.
She's trying to make ends meet on the 50,000 rubles, about $550 a month, that her husband earns. The ruble has fallen against the US dollar since the war began in February 2022, making the price of imported goods climb. And all this comes ahead of the 2024 election, where Vladimir Putin is expected to run again, in a move that would keep him in power until at least 2030. Official statistics show that over 15 million Russians are living below the poverty line. Russian economist Igor Lipitz says the situation is even worse than what the Kremlin reports. He estimates about 20 million people could be in or on the verge of poverty.
The indirect indicator of the situation with the income is the level of high debt ratio that is always discussed again if you take statistics of the Bank of Russia. It's all seen there, how many Russians have 2 or 3 loans, how many families spend not only 50% but around 80% of their monthly income. There are Russian regions where people have to give away 105% of their monthly income. 105. This is what real people's incomes are and how deep in poverty the Russian population lives. Russians are in deep trouble.
Some economists think the ruble could fall even further after the election.
Well, difficult news coming in from Russia. Almost 20 million people staring at poverty and the debt-to-income ratio only rising. But it's not just inflation that's high. In a Swedish report, rats seem to be high too. In a groundbreaking study, rats administered with LSD offer insights into unraveling the mysteries of consciousness, shedding new light on our understanding of the mind. Take a look at this report.
Rats, high on LSD and ketamine, are helping scientists unlock mysteries of the brain.
It's the simplest experiment possible. We just give the drug and we compare the activity before drug and after drug.
Swedish researchers are exploring the effects of psychedelics and amphetamines on the rodent's brain activity in a bid to help cure depression and other neurological disorders in humans. For the last 7 years, researchers at Lund University have been testing psychedelic drugs on rats. Ketamine is a notorious party drug that is also a horse and cat tranquilizer, while LSD became the favoured drug during the hippie movement in the 1960s. Using electrodes that are inserted into the rat's brain, the scientists monitor neuron activity as the animals perform basic activities, such as walking around an enclosure, and compare the brain activity to when they did the same exercise sober. Sebastian Barrientos Beza is part of the research team.
What we wanted to investigate here was to evaluate the commonalities of different psychedelic drugs, because lately this topic has gained lots of attention and the therapeutic potentials are huge. However, little is known about the mechanisms, and we saw a great opportunity.
Researchers found synchronization in neurons in several different areas of the brain. This synchronization could be disturbing the normal way different parts of the brain communicate with one another, which scientists say could play a role in providing models for psychosis. Integrative neurophysiology researcher Pa Halj.
So one important aspect is of course to understand better the therapeutic mechanism of these drugs. Like why is it actually helping in depression, for example? Is it the synchronous activity that perhaps induces plasticity in brain networks that helps you get out of disease states? So that's one application. But the other one is just to understand better how consciousness might be generated in the brain in general.
All right, let's move on then. Annette Bening shares her profound journey portraying Diana Nyad in Nyad, providing a deeper insight into the remarkable story of the legendary swimmer and the challenges she conquered. Take a look at the story.
I think the essence of the film is never giving up, and what that kind of means, and how we all need to hear that sometimes.
No, that's insane, Diana. You tried that when you were 28, and you did not make it when you're 28. You're 60.
I don't believe in imposed limitation. Okay, just a little swim. 3 hours of constant swimming with what I'm and man of war.
It's really about this this obsession, and there has to be a better word that I haven't thought of yet. that's more positive, because it is a beautiful thing. It's a gift, and I think we all look at Diana and say, oh, I want a piece of that. And basically what she's saying is, you do have a piece of it. And if you want to find that thing, whatever that thing is, for her it was the other shore. But she says over and over again, and I love this about her, that this is that her obsession and her inability to let go of this is something that she wants for other people.
Diana is all-consumed, passionate, driven, brilliant, relentless, And Bonnie is the person who sort of keeps her in check, keeps the animal in check in some ways, who's calm and who is always behind the scenes. So that dynamic was the interest for me.
I mean, especially not for a woman. Especially not. You don't even think of me.
Of course I think about you.
I didn't have to prepare. I mean, I went to the gym a lot, and then I, drank some Diet Coke and watched Annette go back and forth swimming. That was pretty much it. Stuck my stomach in.
No, you totally trained like crazy.
No, I did. I went to the gym, and I listened to my my AirPods or whatever.
I swam a lot. I
swam a lot.
I did. I trained for a long time, and I loved the challenge.
Well, legendary story there of Nayad the swimmer. Well, moving on, a remarkable reunion unfolds in New York as an exhibit brings together two of Picasso's masterpieces, offering a rare glimpse into the genius and evolution of the legendary artist's work. Take a look.
Picasso in Fontainebleau is a small show with a big statement. It takes a deep dive into Picasso's 3-month residency in the town of Fontainebleau, France, which is about 40 miles southeast of Paris, where Picasso went in the summer of 1921. Overarching ambition for this whole show is to give you and me and all the visitors who come here some small sense of what it must have been like to be in that studio with Pablo Picasso painting these ginormous works in the summer of 1921, and to pose the question, like, what was he thinking? Why did he make books like this? Why do they look so different from each other? How do they connect and how do they differ?
Well, that's all we have time for on this edition of World Business Report. Don't go anywhere. Stay tuned for all the news, debates and updates right here on News 9 Live. From me for now, thank you very much for watching.
BrahMos. Stealthy, lethal, precise. It flies at 3 times the speed of sound and cuts through a warship like a hot knife.